Crypto, would you consider taking on a reverse mortgage? The owner owes 275. The value of the property is 550. Well, crypto, I'll tell you, we've covered this several times, and a reverse mortgage is actually the only type of property that I would not consider sub-2. Now, the only exception to that is going to be in, let's just say this case here that you're talking about. Your owner owes 275. The value of the property is 550. If you're going to get this with considerable equity and your plan is a very short-term thing, 6 months to a year, certainly no more than a year, and you're going to flip this thing, sure, do it. Because by the time the lender discovers that a transfer has taken place, and then a little bit of negotiating, and then they decide to call the loan due, you'll probably get that thing sold. So in that case, yes, I would consider it. As far as just a regular sub-2, where you're going to hold that thing to live in or for a rental or for seller financing, no. Because the difference with a reverse mortgage is they actually send inspectors out once or twice a year to knock on the door and interview the occupant and make absolutely certain that the occupant is the person on the mortgage. So, and then they're pretty strict on that. So if they determine that they've sold the house or they're renting it out or they've moved out, then they're going to call that loan due. So you don't want that to happen. But in a case where there's equity, maybe you plan to buy it, renovate it, flip it. Yeah, I would do that. Hey guys, thanks for watching. While you're here, don't forget to hit the subscribe button and check out these other great videos and podcast episodes.